Good morning, everyone. Today is Wednesday, June the 5th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band. If you are part of the Benzinga Pro platform, you are going to have a very lovely morning with the rest of us who engaged in the CrowdStrike butterflies. That call butterfly is going to be sweet. I would suggest taking it off right at the open. Just don't be greedy. We have no idea where price action can go. We just had the ADP numbers pull us off the highs. You can see this little wick building. But remember what I said yesterday. If we break out of this range, we're going to move to the next ledge. Which wall of worry are we trying to go through? Well, that would be this one right here. And the top of that, 53.24. The next one above it, 53.40. Here's this gigantic number up here at 53.60, 53.70. Could we do that? We could, but chances are we're going to sell off of this top end because we have the jobs numbers coming in. Something really big is a Bloomberg article floating around saying that the jobs numbers have been overly juiced by about 700,000, and so there could be some sort of big revision that's pumping bonds, that's bringing yields lower, anticipating an interest rate cut, which is pushing markets higher. So there we go. At the end of the day, we're still waiting for the pennies to drop because they're in midair, and I suspect that these bounces are going to give us some kind of wick action. So don't hold for the moon. Not the day for that. Momentum is still negative, which means that as we rise higher, we will not have the energy to hold higher unless momentum begins to drift. Okay, so there we have it. That's what we're looking at. Levels to watch below heavy congestion, still at around that 52.90-ish area. That's my thought there. 52.96, a very nice floor. Pullbacks or buy zones. Look at the size of the wicks we have had every day. Do not underestimate the wick factor event. It's real. And we could go from 52.96 all the way down to 52.84 and then 52.71. It's just a thing in the environment right now. Let's take a look at the NQ. NQ doing the same sort of thing, breaking out of the range. Here is the candlestick formation that it's trying to get over right now, but the volume event is this big candle right here. So I'm going to bring it down, right? And so the floor is still going to be 18,685. Remember, I said, hey, that's going to be a great place to short unless it isn't. And if we pull back and hold it, it's going to be more upside. Here we are at 18,800. 18,870 is next. And then the high of this second volume candlestick is 18,926. Deep dips make for the buy zones here. So as we pull back, watch for the test of motion. Momentum and trend are positive in general, but momentum is very light. So you're going to expect that large moves to the upside are going to bring some wicks. Okay? You just want to be careful about that. So upside again all the way to 18,926. Ideal buy zone, if we're lucky, might be the 685 area, or we could come all the way down into 600. Nice round number. Markets like round numbers. Okay, let's take a look at the YM. Let's see. Oh, yes, here's the one. It's got that. This is the high volume candlestick we're watching. Now, what are we doing? Getting out of a wall of worry for sure. I mean, take a look here. We've got resistance, resistance, resistance. That's that 38,900 zone. If that breaks, we're going to go to the top of this wedge at 39,105, and then, we could go all the way to 39,320, right? Prices are trying to hold. Look at the difference, though. What is trend? Negative. What flattening? What is momentum? Negative, but also lifting. And so this tells us we need to look at the lows and see how they're holding. And we have low, higher low, higher low, higher low. Guess what? Buyers are forcing us up into this edge. I would not be surprised if we got to 39,105. Buy the dip in force for every single one of these formations. 38,680 going to be that sweet spot, unless it isn't. But if you're there and you go, ooh, I'm holding, I'm gonna say that will be a very nice area to watch out. Wicks are very possible in this environment. And so the first thing that should happen off of the top of this range is a rejection, because momentum and trend are both showing downside pressure. So first big bounce to the top, we're going to see selling pressure. We could take that short into support. All right, let's take a look at oil. Are we rolling in oil? No, beautiful. All right, so oil tried to bounce yesterday, and let me go to the second. I have no idea which contract we're sitting on here, but let's go to the weeklies. They're trying to hold 73. My thought is that we hit the skids here, and that's going to be great for the market. I suspect that the bonds moving up, which are suggesting yields down, is impacting the price of commodities and bringing oil down also. This is my thought. But I suspect we hit 70. If we're looking at a weekly chart, we might even hit 67, right? It's a thing. It could be, very much so, right? Whether we're in the front contract or the forward contract, this is my thought, right? We are looking at price action that is negative trend, negative momentum, but not a lot of negative momentum. So you're going to see dip buyers, just like they were here. Notice, see how momentum begins to drift up? Even though trend is down, it's telling you, watch for the wicks to buy. If the wicks continue down, it's just a little dribble before it heads back. But as soon as those wicks start heading up, it tells you it's in a reversion to the mean and might change direction. All right, let's take a look at SPY. I want to look at the weekly. Let's take a peek at that daily. Look at us breaking out. Big breakout, 30. I suspect we head up here into, maybe 531. Pullbacks are going to be buy zones. Where's the best pullback? 528. 528 on that pullback. Should we have a big wick? Looks like it. When will it come? No clue. Absolutely no clue. But if we have a nice wick that pulls us into that moving average, it's going to be a place that you sit and watch and go, you know what? I think I'm going to give that a go. What is that number? 526. If it comes into 526, that's going to be a very sweet spot. Watch for it to potentially lose 526 and then recapture 526.80. That is the area to go long. It's well out of this formation. So people that went long here are being rewarded. They're going to add to their position. 531 to 535, still on the strikes to the upside. Okay, let's take a look at the Qs. Finally, what do we see? Yesterday's break was a fantastic continuation, 453. Now here we are over that 456.28 zone. Where are we headed? Heavy congestion. 460, not out of the question at all. Not out of the question at all. And so this 460 zone, 461, 463, pullbacks or buy zones. Watch for the pullback. What's ideal? 452, 453. Somewhere around there is going to be a sweet spot. Momentum and trend around the same space, flat to resuming uptrend. So we know these pullbacks or buy zones. People who see what's happening in the broad market, listen, if Campbell Soup increases its outlook and gives positive forward guidance, there's a problem, okay? Same thing if we're seeing global airlines increase their outlook. We're showing two sides of the economies globally that are saying completely different things. People who can afford to fly, flying more. People who can't afford to buy other things in the supermarket are going to buy more soup. Okay? It is what it is. We've got bifurcation. Let's watch out. We're going to have a correction at some point zone, at some point, but I don't know when, where, how, who, why, nothing like that. What we have to do is look at the patterns day to day and position ourselves and go, okay, is this going to give me a good position? Do I have my risk managed? And when things come in and things go on sale, am I going to be ready to buy? I'm about 30% exposed in the market, and I continue to use these big bounces as exit liquidity for all of the portfolios that we manage personally here at the homestead. All right, so just letting you know, I don't have a ton of exposure in the market right now, not at all. I have enough to make some good money, but I'm in and out every day, and I just want us to be careful here as we continue to rise. Let's participate, but let's not bet the farm. All right, everyone, I'll see you on the platforms.